Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for September 6th, 2013. This week's topic is the emotional slope. We're all familiar with trend lines, but many don't realize that the steeper the trend line, the more emotional investors are. And of course, when investors get emotional, they often get irrational, paying too high a price on trends to the upside and paying too low or accepting too low of a price on trends to the downside. Steep trend lines create opportunities because investors are acting irrationally. And so you need to look for those trends where the trend has gone from linear to parabolic, either up or down, because there's often opportunity there. Here are some examples. On the left, you see a chart of the GLD, which is the ETF representing gold, and you can see that the trend line went parabolic to the downside, and we've had a pretty good bounce back in gold since then. On the right-hand side, I have a chart of Priceline, which went parabolic to the upside. And it could be said that Priceline is due for a correction back to its long-term upward trend line, which would take it back to around the $850 mark. What's important to recognize is that when trends go parabolic, investors are emotional, and it is dangerous to chase the trend. All right, here is a linear trend in the S&P 500. It is an upward trend. We have corrected back to the upward trend line and appear to be bouncing off of that trend line, and so the buyers remain in control of U.S. stocks. The Canadian stock market has been rallying for the last 2 months, and that has taken the market up to its horizontal line of resistance where it stalled on Friday. You can see there was an attempt at a breakout, but it receded back to close below that line of resistance. What tends to happen is markets that rally into resistance will trend sideways once they get to resistance. But longer term, we are building optimism in the Canadian market, and so it seems to me that this market is on the verge of a breakout. It just may take a little bit of time for the market to consolidate under resistance first. Here's the Treasury bond market. You can see that the downward trend lines are getting successively less steep. That means investors are getting more rational over time. And although the bear market continues in bonds, it is not as bearish as it was 2 months ago. Over time, we're seeing this trend line get less steep. That means the sellers' enthusiasm is waning, and we could see a reversal of this trend soon. Here's the chart of the Chinese market, which had a real good week this past week and continues in the upward trend that broke the downward trend line last month. And we talked about that in one of these Market Minutes videos. The emerging markets seem to be turning around, and China seems to be leading the way. And that is good for the global economy and will help stocks in general. The emerging markets rallied very nicely last week. They are now back up to resistance, much like the Canadian market, where it is now at resistance. It has rallied into resistance. And so it's likely to stall here, but I do like how this is shaping up longer term, and I think this could be the next factor that allows the stock market to continue its bullish trend on the back of strength in the emerging markets. US dollar was a little bit stronger than we might expect over the last week and a half, but it looks to me like it's going to probably recede a little bit this coming week, as we had a little bit of a breakdown on Friday. But again, we're at the bottom of the trading range right now, so the bias is probably to the upside, although in general, you have to have a fairly neutral stance on the US dollar right now. Gold has risen up to its downward trend line where it is stalling, but it is on the verge of breaking that downward trend line. Now, for now, we should remain at best neutral, probably on the bearish side of neutral, because we have a bear market in gold. In the very short term, we've got a bullish run, and that is flirting with that downward trend line. And if the market is able to break it, could happen as early as Monday, then we'll have to switch to a bullish stance. But for now, I remain neutral on gold. Oil broke to the upside on Friday from a flag pattern. That points to more higher prices in the near term. I've been saying for some time that the rally in oil is largely motivated by political events, but with the strength that we've seen in the emerging markets the last week or two, I'm starting to think that maybe there's more to the strength in oil than just what is going on in Syria and Egypt. It may be that the global economy is in fact getting better, and Although the Syria situation may quiet down, and that would be bearish for the price of oil, we could then switch to oil moving on momentum of actually an increase in demand for oil. The VIX fell back this past week. It is generally trying to bottom here, but there's not a real strong break from a rising bottom yet. And so we have to say that fear is higher than it was last month, but it's still not exceptionally high. So my outlook then, I remain bullish on US stocks, neutral on the Canadian market, neutral on gold, and bullish on oil. US stocks continue to hold their bull market trend line, while Canadian stocks are on the verge of starting one. Gold is threatening to break its downward trend line, but it has work to do. We've seen oil continue to be strong, and with emerging market strength, it may be more than the Syria effect driving oil. Well, that has been the Stockscores Market Minutes for September 6, 2013. Have a great week in the market and trade well.